Recoveries are being sold into. That's what we're seeing in our markets as well. Today, we opened well, then we saw a decline, thereafter we saw a bit of a recovery, and that's been sold into quite vociferously. Currently at the low point of trade for the index, and that's led lower by the Nifty Bank, which is now down 135 points. From the highs of today, the Nifty Bank is down about 600 points. So the recoveries are fragile right now. The market is on shaky ground. Let's see where we go from here, even as the mid-cap index is a marginal outperformer. The second half of trade becomes extremely important. But until then, let's get a handle on how consumption is panning out. Lalit Agarwal, who's the founder and MD of V-Mart Retail, joins us now. Now, to set things straight, the reason why we have this conversation is, Mr. Agarwal, because we've heard from a bunch of consumer company managements. Suresh Narayan said that, inflation is still a worry. We had the management of Jubilant Foodworks saying that consumers are still value conscious, focusing on the 49 rupee pizza offerings that they have. And not just that, even the management of Maruti joined us on our channel and said that, cost of ownership of a car has been high, and as a result of which people have delayed their inquiries, or there have been thinning out of sales out there. What have you noticed? Because you are pretty much at the heart of things. Roughly 50% plus stores of yours are in UP, Uttarakhand and Bihar. How has sentiment been?
Hi, Mangalam. Good morning. And definitely things are under pressure. But one good thing is we are seeing improvement at a month-on-month level. I mean, last 9 months have been very bad. But if we look at the last 2-3 months or 4 months, we are seeing the degrowth coming down, and we are seeing somewhere people are feeling a little okay with the inflation, because now it is almost like 9 months and people are reeling under inflation, and people definitely don't want to continue not consuming, because they did consume during COVID and then post-COVID also we are seeing. But yeah, still the pressure is on. The pocket money has not gone up. The consumption basket still is more hovering towards the lower price point products, and that is what our policy and our we also went and focused into. And I think that is where the lower part of the consumption, what the per capita income earning the demography, that demography definitely is wanting to buy, but only buy right now at lower price point products. So that is very, very clear, and they don't want to get onto the higher price point product, because the basket itself is pinching them, because their money, their pocket is right now being shared by multiple other inflationary pressures, which is primarily need-based, and where need is very important for them to first fulfill. But yeah, I think overall the feel-good factor is getting better. People are getting a little more confident on their future income. So I think their consumption, we think, which should improve in the coming quarters.
Okay. Mr. Agarwal, hi, welcome to the show. Well, just wanted to touch a little bit more in terms of what this would probably do to your margins, because you are saying that the pricing points have turned lower for the products at this point in time. I'm assuming that pricing power is probably not in your hands as we speak. But what would that do in terms of the margins for the company on a consolidated basis? Has that trended lower as well?
I mean, definitely, if we are not able to achieve a sustainable growth at a like-to-like level, the margins would get impacted. And now, because there are two things that we saw. One, people are also opting for lower price point products. And for us also, we had increased our prices, and we have now rolled back our prices in this season or the last season, some part also, and which is also creating an impact over the world. So, but largely, we did not reduce our margin a lot, but we are trying to manage the margin with some kind of innovation and blending of the fabric and the products that we are trying to do. There will be some pressure on the margin, but not too much.
Okay. The other point that I wanted to actually touch upon, Mr. Agarwal, is that you have a unique business, because you would probably be impacted by the election spend, which is probably going to increase going into 2023 and 2024. In that sense, have you done any kind of internal estimates in terms of what your same-store sales growth could look like despite this uncertainty that we're facing?
So, I mean, there will be some uncertainty whenever the election periods are coming in. And whenever the election period comes in, there is a social disturbance which also comes in, and some logistic disturbance which also happens, because large part of rural as well as semi-urban people come to our stores for their needs, and they get disturbed by those election rallies and some kind of political or religious environment sentiments which gets built upon. So there is some pressure which can get built upon at the start of the election season. But once the elections are done, we feel that there is a lot of money which gets pumped into the economy, and we have seen in the past elections also. Just after the election, we see the growth coming in strongly, because that money which gets into the small consumer, and then those voters bank or the service providers, all of their money that gets into consumption, which is always helpful for the economy. And also because we have seen also election days are days when the rural is being targeted much more better way, in a better way, by providing a little more relief to the rural people, to the farming segment especially. So that also should be a beneficial piece. I can't number the like-for-like growth percentage, but we are positive on the same.
Right. For the fourth quarter, what kind of SSSG are we should one expect? Mainly because the third quarter was just about 1%. Footfalls were higher by about 13%. And all of this, would also mean that as we progress in the quarter, there would be pre-wedding season buying, etc. as well, which is usually a large part of sales for you. What can we expect there?
I may not be able to number you. We will not see too much of difference on those numbers. It may hover around similar numbers, maybe plus minus 2% from the last quarter. But I think largely what we are seeing is the confidence coming back. Anyway, fourth quarter is normally an end of season sale period, no weddings here. But towards the March, we see a holy festival, which drives some sale in Uttar Pradesh and Bihar. But especially this time, Uttar Pradesh and Bihar, for the entire year, has been under a little more pressure. And we have seen a little more pressure coming in those states. But I think, gradually it is coming out. Holi was a good festival and a good period that we had. And I think we should be able to generate better sales in the coming quarter is what we expect.
And finally, just one more before we let you go. A large part of your Arvind Unlimited business is in the southern part of the country. Then you also have the Lime Road business that you are integrating right now. Could you give us some sense of trends across all these places? On the one hand, you have your core business in the northern part of the country. Unlimited is in the southern part. And then you have online. How have trends been here for you?
I mean, Unlimited integration has been pretty successful and pretty good. We had experimented few things. We kept the brand similar, and we had experimented few things. We wanted to bring in some lower demographic customer segment, which right now we have not succeeded fully. But still, we have seen some positive response. We have made this unit also profitable, and it is also profitable. We are seeing better growth in the first half of the first 2-3 quarters of the year. We saw a little better growth coming in from southern states. In this quarter, we are not seeing as such. The growth has muted there. But anyway, I think we are working so that we will be able to. And we have also opened up more stores in that particular territory. We have opened up 9 more stores in that particular territory in southern India by the brand Unlimited. So that we see a good future coming in. We see a good margin also getting built up in the coming 2-year period. Apart from that, Lime Road, I think that's a piece that we have acquired recently. So that is something that we are going a little slow on integrating and trying to see how do we converge both the culture and how do we use both the pieces. As of now, we are trying to strengthen that particular platform by integrating a lot of things and by stabilizing them, because they were under a little more pressure of liquidity. So now the liquidity pressure has gone up. So now they are coming up, and the sales the customer footfalls have started building up on those platform. Now we have started the journey of integrating the two, V-Mart and Lime Road, so that we are able to give our V-Mart customer the digital experience on Lime Road.
Okay. All right. So we're going to leave it on that note. Thanks very much for joining in and speaking with us. So that is V-Mart Retail talking about growth in this year. For the markets, it is definitely a little choppy because the Nifty is now slipped into the red. It's down around 17 odd points. We have the Sensex, which is down around 100 odd points. So there is come off from the day's high, and that is more in the financials again. So the financials have not really been able to hold up that 39,000 mark as we speak, down around 150 odd points for the Bank Nifty. Well, let's see if there is buying at lower levels. As of now, we need to take a short break. But up next, full tilt on the markets. Prakash Gaba will be talking technicals with us. Stay tuned.